All right, so we're going to be going into Robinhood's litigation by Rosen Legal. So we all know what happened in January, where the run of GameStop went up to around 420 plus dollars, and then all of a sudden went down. And Robinhood was a huge factor in that because they stopped trading. They stopped trading, and well, not stopped trading. They just made it so that people could not buy GME anymore. And because of that, they believe that people ended up just selling and selling off their positions. We all know what happened. It went down to $40 within the next uh, day or two. So this is the litigation that is being held up by Rosen Legal. And the most interesting part about it is that they show on page 7 the short interest on January 15th. Now, people believe that on the FINRA site that the short interest was just a blimp, that it wasn't 226.42%, and it was a short interest. Well, guess what? It wasn't just a blimp. It wasn't just a glitch. This is actually the short interest that was there on January 15th, 2021, with GameStop at a short interest of 226%. 226%, guys. How does it go from 226% and the next day they say it's at 20%? Yet the price didn't go up from there. It just went straight down.
Nice.
You know, that's
Fraud and lies.
fraud and lies, smoke and mirrors. So this is why this is even more proof to show that this is a really, really highly manipulative and fraudulent game that they are playing, and they are now getting caught. So it's huge. If you want to opt into this lawsuit, just go to Rosen Legal if you lost any money, and you can opt into this lawsuit. And
Make sure you only opt in if you had losses. Don't just opt in because you wanted.
Yeah,
like, I want
you make sure you own GME at the time, and you're able to prove it.
And what time period is that? So I believe we're going to have several viewers who do own GME and have owned it for, the last couple years. How long do you have had to have owned this in order to, take part of this?
Well, you just had to have owned GameStop during the time Robinhood shut off tradings, and if that affected you in any which way, you are able to hop into this class action lawsuit and ride the wave of suing the pants off of Robinhood. So that's going to be really exciting.
If you want to Robinhood squirm, this is the best legal payback you're gonna get. Just take the money right out of their pockets.
Take their money, get it all, and when I was a little boy in Bulgaria, he can go back to Bulgaria if you'd like afterwards, because everyone's gonna know his face.
Wait, what?
Yep.
The CEO? I don't know what that just came out of nowhere. If you're a little boy from Bulgaria, you're going back.
That's the CEO of Robinhood. He's from
Bulgaria.
He's from Bulgaria, and during the time he was getting interrogated for everything by Congress, and we would always start out with, well, when I was a little boy in Bulgaria,
and I was just a wee boy. Like, no one cares. We're talking about today. Like, we move this along.
2.5-3 minutes. He would start out by taking 30 seconds of the time to just say, when I was in Bulgaria, and then there you go, and then they're like, answer the question. Well,
guess what? You're not in Bulgaria right now. You're in the United States Congress answering questions. So move us the fuck along, please.
You're a grown man.
Yeah, no one cares about what you were. You were born. You were so cute. That's great. Right now, you're guilty of fraud. So can we just move this fucking along a little bit?
Well, we need to welcome GME into the Russell 1000.
Woo! Welcome, GME.
Yep, the Russell 1000 just bought up 42,455 shares for a weight in the Russell 1000 of 0.03%. So we all know XRT is overly shorted, and I saw it today at 222% shorted again, down from 204%. But what happens now is they're not going to try shorting the Russell 1000. It's too top heavy. They have Facebook, Google, Amazon. They got these big guys in there. So if they're going to try shorting it, it's going to take a huge chunk of change. But let's talk about the most important thing right now, dark pools. So what are dark pools? Well, dark pools are private asset exchanges designed to provide additional liquidity and anonymity for trading large blocks of securities away from the public eye. So what does that mean? That means if I'm JP Morgan and I have to put a buy order for $500 million for Apple shares, I don't want to put that on the market. I want to be able to do, and by the way, you're able to do iceberg trades on your regularly trading for retail traders. But for them,
What's
they
an
got it
iceberg
on.
trade?
Well,
Yeah, you have
iceberg
to-
trades are where you're able to just put like, hey, I want to buy 1,000 shares. I'm just going to show that I'm going to buy up only 100 shares. I'm only going to show like a tiny fraction of my order. And then
Icebergs are small above the surface and deep below.
uh-huh,
There we
and
go.
deep
All
below.
right, that makes sense.
So we can do iceberg orders if we wanted, but for them, they're like, well, we have millions of dollars, and we don't want to just do iceberg trading strategies. No, we want to have our own exchange, off-market exchange. So for us, our orders go through our brokers. It then goes through the DTCC, which is the trading, which is a clearinghouse, and we can see all the orders on our level 2 when we're doing trades. Now, for them, for the wonderful market makers like JP Morgan, Goldman Sachs, Citadel, all these big guys, they use an alternative way to get their trades in, and that is called dark pools. So if we see the CBOE gives us this chart of the percentage of what these exchanges and how much of the order flow goes through these exchanges. So if we see that very top line is the NASD ADF, and the ADF stands for Alternative Display Facility. Now we can see right there that the majority of trades are going through these dark pools. They're going through the market makers just putting, taking advantage of these dark pools, and they don't even have to put it on the exchange, and we don't even know. Well, I mean, if you've ever seen a level 2 while you're trading, you'll out of nowhere you'll just see a blank exchange come in with 1,000 buy orders or 10,000 sell orders, and you just see the stock jump or drop just in a moment's notice, and those are dark pools. You don't see them coming. It just happens. They don't have to show you that they're even on the market for their order. It just happens. Meanwhile, the retail investor needs to put their orders on the market, and they see that, and they're able to use these high-frequency trading bots in order to get the best price and tick down and chip away off your profits. But the most egregious thing that they can do is not report their trades. People are saying, oh, they need to report their trades. Well, guess what? If you go to FINRA.org and you go to the filing report, market transparency report, and then the trading report facts, you can then see that there is a question 102.2 that says, does the 10-second reporting requirement apply to the submission of non-tape reports to FINRA? That just means, do dark pools have to report their trades to FINRA? No, they don't. Members are not required to submit non-tape reports to FINRA within 10 seconds of trade execution. However, regulatory reports generally are required to be submitted within specified timeframes. That means they get leeway. They get to be like, hey, we shorted a stock. We don't even have to report it to you. We naked shorted it. We don't even have to report it. They can hide whatever they want on these dark pools, and FINRA allowed it. FINRA, by the way, stands for Financial Industry Regulatory Authority, and AKA they do what they want, and if you have money, they allow you to do what you want. So
welcome to the flip side of capitalism. You got enough money, you can make your own set of rules, and then most people don't look for those rules, and everyone's like, why isn't it fair? They, well, it's not fair because you don't work hard enough, and you didn't put enough money, and you should get smart. It's like, yeah, also there's a whole different set of rules for them that they can play that we can't do it. So maybe FINRA should stop running its mouth and actually do its job, since it's a regulatory body, not a fucking giveaway.
Exactly. It's unfair. They're able to hide their naked shorting or anything they want because they can, and FINRA allows it, and we need to make this a more even playing field. I'm not saying get rid of dark pools, but I'm saying get rid of dark pools. It's if you have over 40% of trading going on through dark pools in which they're hypothesizing that these shorts are able to just trade with their shorts and back and forth, so it's like hot potato on their positions so that they never get caught. When the SEC comes over and they say, hey, what is happening with their little spotlight? And they're all like, oh no, it's not me. I don't have these these positions. What are you talking about? Feign ignorance. That's the best way to put it. So dark pools, though they sound cool, they really have been messing with the market, and these the regulators have even come forward to say as much, and say that there's not the proper price valuation is due to this as well.
Because then they would have to actually spend their time doing real work and actually regulating and making sure things are fair, not just kind of sitting there and meeting occasionally and be like, yeah, everything's okay. If you're going to be a regulator and you're going to be a regulatory body, your role is bigger than yourselves. Your careers don't matter. Your job is to make the markets fair. And I think that over the last 20, 30, 40, 50 years, our regulatory bodies have really, to put it slightly, shit the bed when doing their jobs. And they need to do better, because these functions exist for reasons that actually make sense and are valid. But then the human beings that allow them to be misused and continue to allow them to be misused and don't give a damn that they're being misused, they need to be held accountable. All of these regulatory bodies, these people need to be investigated, and they need to be tried and said, do you actually know what you're doing? Are you actually looking at these things? What are you actually going to do to make it? And if not, we need some people that are actually willing to step up and say, I'm prepared to do the work and slog it out. Like all the lobbyists and all the ridiculous amount of money being pumped into legislation from all these companies, I'm willing to actually do my job and say that's not going to work anymore. I want to make changes that make the markets fair for everybody, because in the end, they're not, and the markets just become a wild free-for-all for only the wealthiest, you're going to lose a lot of investment in the markets, and they're no longer going to do what they were supposed to do. It's just going to be a betting ground for the very wealthy, and that's not what it was built for, and that's not what it should become. So if I think if regulatory bodies want to protect the markets from collapse, as well as protect themselves from being invalidated by future legislation, they should start doing their jobs. Because I bet you have younger individuals in Congress and the Senate, younger individuals in the White House. Once these older generations have kind of moved on, I think that then they're going to be subject to serious repercussions. So they should just get out ahead of it and do their jobs. Please just do your job. I don't understand how hard
that's all they have to do.
Do your job.
Do their job. And the SEC's right there like, well, we don't see fraud. It's because you allowed them to get away with fraud, so that there's just like, hey, you don't even have to report something. I could look the other way. And now it's catching up to them.
They sit there and they're like, well, we wrote these laws, so they're following these laws. I'm like, because the laws are garbage. You're going to tell me we wrote these laws, so this is good enough? You obviously need to do a thorough assessment of, like, yeah, they're complicated, it's a lot of work. It's because you wrote complex laws that make it impossible for things to be changed. You now need to go back and undo that and actually make the laws make sense, because you're right. It does, based on these laws, they're allowed to do that. But these laws are not effective, and they're not fair, and they're not what they're supposed to be in the market. Okay, so you need to reevaluate the laws, which means, yeah, you're going to have to do some work. You're going to have to actually do some work.
Yeah. And next we're going to go into this really cool site. It's called StockGrid. So StockGrid, if you go on there, stockgrid.io, it's all about the dark pools. When you first get on it, it's going to say QQQ. You could just click that and then press
I got Briacell. I got BCTX, Briacell Therapeutics.
Just click that. Click GME, and you can see the amount of what's happening with the total volumes and the short volume, and this is great. This is great data to see what's happening in the market through dark pools as well, with whatever data FINRA is giving us. That is not every. I bet there's still much more that's happening behind in the background. We're not able to get 100% of the data, I bet, but this is definitely a really good step, and it's really cool. You could see when you look down, you can see the net short volume, and it's just a lot of stuff. We could go back to the other site as well, and you can see during the times at which you believe a lot of things happened with the market tanking like GME, and you can see a lot more has happened percentage wise in dark pools. So this is just a really cool site, stockgrid.io/dark pools, and you could do your research into the short volume percentage, everything like that, and check out for yourself, see what's happening.
Definitely a good resource.
Really good resource. So aside from that, anyone have any questions, if there are any viewers?
All right, so I just popped up GMEs, and from what we were previously looking at, looked like a normal chart, and here we can totally see the drastic change between, just the activity in dark pools. Before it looked like this, and now we're getting these, empty high rises.
Yeah, look at that. The total volume from FINRA, 97,000. Short volume, 33,000. This was on January 1st, 22nd. And you can see that's the highest spike where the short volume was the highest. That's 1/3 of all trading volume occurring right there was short volume. And if you go down, you can see the net short volume as it spiked down on January 26, 2021. It spiked down all the way down where the volume went really low. Net money volume, net cash volume. So these are all really cool charts. Do your due diligence and check it out. But as of this moment, I think it's definitive to say that GME's short volume they never covered their shorts, and the short volume is short interest is still up there. And with everything that has been occurring, I don't doubt that it's over 400% at this moment that GME is shorted. So do with what you want with that information. But
what are you doing with that information?
Well, this is not financial advice, but I sure am in GME, and everything is showing that it's going to keep rising. If you see the chart now in GME, you will see that every 21 days, when it's failed to delivery time, the floor keeps rising. So right now it is at 200 floor. In 21 days, it's going to be higher, and 21 days from now, it's going to be higher. And that's just a pattern that you just keep seeing in GME right now. And they're running out of money. They're trying to cover up their positions with all these deep in the money options in order to hide their shares, their shorts. And, it's only going to last so long.
So who's running out of money? GME's running out of money?
Citadel is running out of money. These large institutions are running out of money. Malvern Capital never closed all their positions. I love the news article that said Malvern Capital says they closed all their public positions. And I'm just like, I love it because it said public positions. Right. And I'm just like, of course they're not going to show that it's all their positions, but I believe Malvern Capital is going to be the first hedge fund to default, just after, of course, this prior one in London defaulted. What is it?
White Square.
White Square. Yep, yeah. They're the first ones, but that was because of their investors. I believe Malvern Capital is going to be the first one to default because they didn't want Malvern Capital to default. You know why? You know what gives me more proof? Point72 and Citadel invested $2.4 billion more into Malvern Capital after that whole incident. So you think they want Malvern to default? No, because they are holding a very, very large position in shorts as well. So.
Okay.